Okay, folks, welcome back. This is our midweek review for the ICT mentorship for December 4th, 2019. All right, so we had a welcomed change to the very stagnant market we've been dealing with for the dollar index. We were looking for buy-side liquidity to be swept. The only thing would change the bearish stance would be the trade above the fair value gap here. We did simply run above the buy-side liquidity, resting above these relative equal highs, stabbed above that and rejected. And we were looking for this to continue this week. I said that we want to start off right away with looking for down movements. Okay, and very little movement above the opening, and the large portion of the daily range would be on the downside, creating the low. And we've seen that here. So far, we had a little bit of a deeper retracement. I want to see it stay below 98. Okay, I think it could try to get back up into the range in here and then roll over is what I would like to see. Preferably, I would like to see it not even enter back into the range and just stay below yesterday's low, and then create maybe small range days in here and then resume lower for the sell side liquidity pool resting here. So everything is still in play for running here and then eventually trying to grind down into these relative equal lows. Now this will also be important if we get down to this level. Will we do it in this month? I don't know. This certainly is possible before Christmas, and you're probably looking at this thinking, well, it could do that in one day, and it can. But we're also in a very stagnant consolidation, and we could have just simply came down below these equal lows and then stayed in this range between 98 and 97.40 for a few days. It could really be frustrating, but I don't want to see those things. And really what I want has nothing to do with what the market's going to do. My expectation would be to, again, see it resume going lower and reaching the sell side liquidity pool here. So everything remains bearish. Now I want you to also recall how I mentioned this old high back here, and that's the 2018 old high, and how we had 1, 2, 3 major times trying to get above that, and then we just stalled many times there again, multiple attempts to go above it, and then where we're at now. So very difficult. I made no bones about that, but it was nice to see eventually the signatures that we look for pan out. So it's very handsome to see that. Let's drop down into an hourly chart for dollar. All right, so here's the dollar index on an hourly chart. And I want you to take a look at what we've done since December started. We had the initial run above those equal highs on the daily chart, and this is that old 2018 high. We had a break in market structure, fair value gap. Okay, and while it didn't come all the way back up to close the gap entirely, look at where it was sensitive to, the old 2018 high. Now, these are things that I taught rather extensively, even in free tutorials back in Baby Pips days, and everything I've taught from using important highs and lows, and they are yearly highs and lows, quarterly highs and lows every 3 months, monthly highs and lows, weekly highs and lows, and intra-week highs and lows, and then old daily highs and lows, like previous days high and low. This run to this high in immediate rejection going lower is something that you probably would have never paid any attention to had I not given it to you in the chart. You never would have seen that 2018 high as a factor here. You would have looked at this and said, well, maybe it just didn't need to get up into that gap and completely close it. If you go back and look at the times where the fair value gaps don't close, but they come real close to it like that, you're going to find an important level relative to a higher time frame or a higher perspective. In other words, we're looking at yearly ranges with this level here. So that was a 2018 high for dollar. And it came into beautiful resistance here and fell out of bed like gangbusters, just beautifully sold off and continued going lower below the sell side liquidity pool, which is this line here. We had one attempt to go shallow, another attempt to go shallow, and then finally aggressive run deeper. So now we came back into it here as resistance. We want to see it kind of like find a willingness to want to go lower. There was a small little fair value gap in here above the old low, which is that sell side liquidity pool from the daily chart. Again, rewind the video and you'll see that that's what this level is here. We went back into the fair value gap. We had 2 times in here. We want to see it just roll over going lower. Okay, but don't be disheartened if we see it stay in a range, between 98 and 97.40, I think is what it was. Whatever this low is, let's see what that is. The low 97.43. Yeah, so this is basically call it 97.40. It could stay in that range for a couple days, or certainly remainder of this week and beginning of next week, and then we want to see it move lower. Again, ideally, we want to see it just roll over from where we are right now. All right, moving on to euro dollars. This is our daily chart for euro. And really nice run since the equal lows I outlined. I said I wanted to see it trade down into that. The open on that candle that creates the bullish order block on the daily chart. Sell side liquidity coupled with a bullish order block. Really nice discount array. Came to fruition perfectly to script. Traded down below it, reject and traded higher, running the equal highs back into the fair value gap here. How we get to this buy side liquidity pool remains to be seen. I don't know if it's going to require to come back into consequent encroachment of the fair value gap or BISI in here, buy side of balance, sell side inefficiency. I'd like to see it remain above 110.50. Okay, so 110.50. If it goes below that, it's going to be problematic, and I'll probably want to reach deeper below here and still trade sideways for the remainder of the year. I can accept, seeing 110.50 trade down into here and then resume going higher for the buy side liquidity here. Again, think about what I outlined for dollar. We could stay quiet for a couple days and still not really change anything on its bearishness. The same thing is said here, just in reverse, because the euro is diametrically opposed. So if the dollar is weaker, as I'm anticipating, then we'll see an eventual run higher on euro. That's what should happen. Even though we had this real heavy run into the fair value gap, I tweeted at the time, I said that we were at a important level to watch and see how it trades. It traded up into consequent encroachment. I said on Twitter to pay the trader, prompting you to pay attention to what's going on. And we failed to get to the opposite end or the high of the fair value gap. Now, this is why it's really, really important. It's crucial for you to not marry the vein. That means don't expect everything to pan out perfectly. This is the reason why we have to take partials, because as a developing trader, you're not going to have the experience to hold onto the trades to get to the ultimate objectives over here. You're going to be lulled into thinking it's reversing. You'll get scared, or you'll stop out because you're getting too aggressive about bringing your stop loss up too quickly, too close, and it prematurely ejects you from the trade before you actually see the biggest run in the swing. So when we get to the bottom of the fair value gap, that's a level we could take profit at, or partials. Consequent encroachment, mid part of the gap, that's another level we would reach for taking partials. And then when you get this deep retracement, if your stop loss is down here below the expansion on Monday, you're not concerned, because number one, you've paid yourself at least once, maybe twice. And even over here, where I mentioned, if I'm not mistaken, I did say something on Monday to take something off. If I didn't, the protocol, it should have been within reason for you to take it if you did it long. There's a few of you that were very startled at the reaction because you paper traded it and or demo traded it as it went below that low. And some of you were very upfront and said that these are the first time that you did that. You executed on a down candle below old lows, and it felt like it was extremely bearish. And your expectations were that you were going to see it trade aggressively lower. Well, some of you, not all of you said that. And I'm saying the ones that reached out to me. And the folks that do these types of trades initially all have the same reaction. It just doesn't feel right. It feels scary. It feels like you're doing it wrong. I mean, everything in the chart looks like it's going lower. But when you outline it, as I did for you with the equal lows, I said it was going to go down here. And then, well, let's rephrase that. I said I would like to see it trade below these equal lows into the order block and then reject and go higher up into the fair value gap. We saw that transpire. Now, did I know with absolute assurity that it was going to happen? Absolutely not. There's always some measure of risk. Okay. Some of you feel that I have tools and things at my disposal that's going to give me 100% odds of it going to pan out. And I'm going to say this very clearly and succinctly. I do not have that ability to be 100%. It doesn't exist. You're never going to have that. And there's going to be periods where the odds, if you will, are so overwhelmingly likely to see a specific thing unfold. Those things I comment on, and it's based on the things you're learning or learning in the future. So most of the things that you see me comment on, I wouldn't say them if I didn't believe it, because otherwise it would be just me just talking in circles and really meaning nothing and seeing nothing come to fruition. The month of November was extremely difficult for me, and I really want you to spend some time thinking about that when you get to this weekend. I mean, some of you probably have already done so, but really reflect on how difficult it was for me to find something to outline. My ability to focus on one side over another was really challenged, and it was one of the best lessons since I've started this mentorship with everyone in 2016. It was the best environment for all of you to be forced to endure. The educator, me, your mentor, I was telling you that I wasn't getting very clear signals, and some of you didn't want to believe that. Some of you were expecting some kind of a punchline, and I absolutely meant it. It was very difficult for me, and it's important for you to give yourself permission when you encounter those environments to take a step back and do nothing. Don't try to force something. Don't assume because you have tools and you have someone that you have a lot of faith in teaching you, namely myself. You don't want to basically impose your will on the marketplace, because there are periods that I will simply say, I don't know yet. Now, saying that is not weakness. It's absolute maturity. It gives the analyst permission to look for more information, and it gives the permission to the trader in you to sit still and not feel like I'm going to miss something, or I'm doing something wrong, or I'm not making good use of my time, and I should be studying the markets really, really hard, looking for the next move, because even though it's probably not obvious right now, it's there. No, there are simply times when the market is simply not going to move. And that's one of the benefits of being with me every single week, is for you to see with my eyes, almost 30 years experience. I can tell you from my own personal understanding and study where these conditions are and what is likely to occur and what hardships that you're going to encounter. And my job as a mentor is to talk you through them and try not to allow yourself to get impulsive about doing something because you feel like you're wasting time. In this industry and in this mentorship, you want to learn when not to do something, because that is wisdom. Everyone else out there can find something to make money on, and whether those things were attributed to the factors they want to ascribe to or just coincidence. And I have been exposed to just coincidence and blind luck in the beginning when I first started as a commodity trader. So I know that environment exists, and it can lull you into thinking that you're smarter than you really are. teaching yourself or allowing yourself to be taught how to admit an absence and void of understanding in current market environments. That is one of the surest signs that you are a mature, objective, independent thinker that is not going to be swayed by others' opinions, the excitement, the fanfare, the drum beating, all the things that will get you worked up into a frenzy to take a trade. All those things will be, well, unprofitable in terms of derailing you. Knowing when to do something and when not to do something is a huge advantage. 99% of traders out there do not have that skill set. That skill set of waiting for more information and not being impulsive, not being the person that wants to impose their will. And because you think you have time, therefore, let's get in there and trade. Or I haven't taken a trade in XYZ number of days or weeks. I need to do something right now. Those things, okay, those environments, those conditions or circumstances will always result in pain. Because what's going to happen is you're going to do those things, and as soon as you click to enter the trade, you're going to regret it. You're going to feel it inside, but you're going to try to suppress that. What you're learning here is not to go through that regret of pushing the trade and getting in and then watching it go against you, and then you arm wrestle with yourself saying, oh, let me just see if it can go back to break even, and it never goes back to break even. It goes further against you, and you say, okay, well, let me just see if I can go back against where I'm at right now. I don't want to get out of this level of a loss. Let me see if it can, and all of a sudden it just turns into a big loss, and it's just a mess. And all that is completely avoided if you listen. You're going to take losses, but you will never end up in those environments where you're confused, you're arm wrestling because you did a mistake, and just completely toxic thinking, poor execution, and just rushing to do something. That's the level of understanding you're getting here versus what I was putting out in previous teachings prior to August 2016. I'm giving you all of the things that you will need and what will help you excel very quickly. Now, some of your definitions of quickly is unrealistic. Just like some of the folks that come in here, they think they should have access to everything, or they want to be able to pay it, month 1, month 2, month 3 in days, not waiting a full month. Those individuals are never going to be good at this because they're rushing to get through content that takes too much time to digest, spend intimately with yourself, and research them and see what resonates with you. Because if you don't do those things, and if you don't log them in your study journal, the epiphanies won't occur. You won't feel like you've learned anything, and you'll come away with, this is too hard, and ICT makes it too vague. And I have not made it vague. It's very, very and clearly spelled out. And the benefit of these weekly commentaries is that I'm actually reaching into the understanding that you all have relative to the core content, and then placing that stuff in the right place at the right time, and avoiding the things that are not necessary or required at the time we're looking at price. So even though there's a lot of moving parts, there's a lot of theory and a lot of principles and concepts and protocols, there's a place and time for everything. And that's the benefit of being with me in the mentorship. So I say all this as a reminder to folks that we just encountered the most difficult month I personally have ever had as a trader. Now, I'm not saying that because I lost money, because I didn't lose money, but I did lose my patience. Very few times can I admit that I lost my nerves about a market. And I'll be upfront and honest with you, a lot of it has to do with performance anxiety, because I know there's a large number of you in here. And here's what you need to understand. I don't personally care if you all quit and never continue with the mentorship, because I already know these things and it's not going to change it, and I can do it. I wear my heart on my sleeve with every student, and it's my absolute desire for all of you to do better than me and not to endure the things I had to endure learning this. Some of you want to do things your own way, and that way is not the right way. And it's hard for me to communicate that to you because you're coming in with a very small perception of what you're going to learn because you don't have the big picture. And that's the other reason why I don't give a breakdown. Like, I have people ask me, can you give me a curriculum? Like, what are you going to teach? No, I don't do that because it will give in the impression that everything can be concisely explained in this or that, or I'm not going to worry about anything until I get to that month, and all these little cherry picking scenarios where people that come in, they don't know what they're doing, or they've been trading for a while and they've had hit or miss results, or even worse, they have a method that makes them money and they think that they're smarter than the average person, so therefore they should be able to excel and go through this faster at a more accelerated pace. And all of that is baloney, because what you're learning here is completely different than everything else out there you're going to touch. And I know this from firsthand experience because I designed it. So all of the other things that retail will subject you to are going to be, available to you at a faster, quicker pace. And none of that is going to translate into profitability. Here, what I want you to do is really focus on the things that I'm drawing your attention to and the things that I say. There's sometimes when I'm giving the commentary, I'll say, I don't want to see these certain things unfold. Now, when I say those things, I want you to research what would make me say that. Sometimes I give the answer in the videos and sometimes I don't. But the things that I say that about are actually in the core content. But it's the opposite of the effects and signatures that I'm looking for. So what am I saying? The absence of specific signatures in price action that I look for is a communication of many things that would line up to a reversal. Okay? In other words, I can submit myself to an idea and co-sign to a view, like I have been with the dollar index. I stuck to my convictions about my experience, what it is telling me, even though the chart could be telling many of my students in here and other people around the world saying the dollar was going to go higher. I just trusted what I know, and I've been here before. So I leaned on my experience, and it proved correct. Now, it's not an arm wrestling match, okay? Because I know there's a few in here that are very strong-willed individuals, and some of you like to go up against me and say, well, I think this is what's going to happen. And very rarely, very, very rarely am I wrong, okay? But when I am wrong, I know why I'm wrong. You will know those things by spending time with me for yourself. You'll know the environments that you're going to want to trade in. You're going to know when to stay out because I'm going to tell you in advance where the problems are going to most likely creep in. Where are the pitfalls? What are the things that are going to be, problematic? And when we go through these rituals every week on Wednesday and then on the weekends, it's important for you to listen and not just hear my words, but listen to what I'm trying to draw out of you or instill on you. I want to put something in your mind in terms of mindset that really can't be captured or obtained by learning from other resources or other teachers. And I've looked at a lot of things that out there that would otherwise seem like it's the secret sauce. It's this is the Holy Grail. I'm going to be real honest with you folks. This is the Holy Grail. Okay, this is it. You're in it. You're in the very inner circle of it. And some of you really don't understand the gravity of that, okay? Because what we're doing, even though it's not 100%, we are looking at market moves before they happen at a level of consistency and precision that transcends all other disciplines and all other educators. They don't know these things. Now, there's a lot of people out there in the 20-some bracket, okay? All these 20-year-olds pretending that they're market makers, or now they know all the secrets of the market maker. okay, because they got their hands on some bootleg videos, okay? And those videos, while they probably made them feel like they're superhuman and bionic in their brain now, they're incomplete. And they're only going to go so far as the words that they hear me say, because that's all they're doing is regurgitating. They don't have the experience that you're tapping into being here. So the charter members that are here, you're learning continuously. You're getting more education. You're getting a huge amount of experience because you're leaning on mine. There's a lot of advantages over not feeling compelled to make the decisions on your own initially. Eventually, that's your goal. You want to gravitate away from me giving you the basis, and that's why you want to kind of like do your analysis before you watch these videos, because you want to see if you're in alignment with what I'm saying or my perception of what I think may unfold, and or if it's not, figure out after the fact. I'm not saying go in here with an arm wrestling competitive mindset, because that defeats the whole purpose. You're here to be trained, okay? You're here to learn what it is that Price is going to do next, not be in a competitive state of mind, because competition with yourself is going to be one of the things that's going to lead you to do things impulsively. Like I mentioned earlier, you're going to feel like you got free time. Oh, let's get in and click and press a button and get into a trade. And regret will hit you right away, because it normally will happen that way all the time. And especially when it doesn't work immediately like you want it to. And then you start wrestling with yourself into the loser cycle. If you don't allow yourself to be flexible in terms of what you expect yourself, and then watch the analysis, what I give in commentary, be flexible in the fact that I could be wrong. And we've seen that. November has proven it. I can be wrong. It doesn't change the underlying premise or statistics behind the things that I teach you, because here we are, it's delivering again. So if you would have over leveraged doing things impulsively because you need things to happen for you, okay, or you join this mentorship with no real money or finances to weather it for 12 months and then the charter member payment, and you feel like you got to make money on the things I'm talking about, you're going to do things like that and you're going to blow it. You're going to mess it up because you're going to over leverage, or it will be wrong, and that loss will be so significant to your balance, it completely blows your mental capital or blows your account. So you won't be here to learn. You're here to try to use me as a signal service. And that's what the first group quitters did. They left. They couldn't deal with it because they're not here to learn, or they weren't here to learn. And some of you are in here. Maybe you just started. Maybe you're going in the second month, and that's what you're thinking. Like, I need this to start making money for me, or I'm going to leave. I'm going to help you out. Leave. Because you're not here to make money. That part comes later on. You're here to control yourself, learn about yourself, and then implement things that you're going to learn modularly and conceptually over time that will lead to an ability to be able to make money like you've never seen before. Some of you want the real quick, get me rich, Michael, make me rich right now. And I'm going to break you. You're not going to get that from me. It doesn't work like that. You can watch every video in this mentorship, and that's not going to click for you. The folks that are here for the lifestyle and the consistency goal, those are the ones that are going to thrive. They're going to do very, very well here. The ones that are listening, they're being flexible with themselves and their expectations, because what you think is possible is completely out of line when you first come in here. Some of you think that you're going to hit the ground running, you're going to make 100 pips a week, and it's this and it's that. It's not like that, because all of a sudden, when you look at the charts, there's a decision that needs to be made. And I tell you my perception of price every Wednesday and every weekend, and I'm on the hook. Like, I can't go back and say, well, I really didn't mean that. Okay, either it pans out or it doesn't. And we had several instances in November where it didn't do that. And some of you that just started, if that is problematic for you and you have second guessings about whether this is right for you, quit. Because I don't babysit anyone. I'm not going to sugar talk anything. I'm not going to give you all the cheerleading to stay into this. Just quit. Because it's going to happen again. Now, when will it occur? I don't know. But guess what? That's exactly what it's going to be like when you start trading with live money and making the decisions on your own. You're going to incur losses. You're going to have a period where everything just simply doesn't make sense. And you're forced to either make the decision of sitting still and wait for new setups, new information, or gamble and then see what happens with Lady Luck. Sometimes she likes you, sometimes she doesn't. Either way, it's not a bet I want to take. So there's a lot of, discipline that's required to be here. And it's not just to simply watch a video, let's hear what ICT says, because there's lessons, even though you don't realize that when I'm talking to you, like this one, I have different angles I'm coming at with different people, and I'm responding to all of them with one small rant. Now, it may not be small in terms of time, but it's a small rant that's concise compared to the things I would have done on YouTube. But you have to be able to discern the length of time that we've been going since August 2016. I saw some goober on Twitter. He tweeted to me, how can I have all this outstanding accuracy now? And during the live sessions in the mentorship, they weren't as accurate. Well, number one, those lessons weren't for me to be giving signals. I was giving mindset, things that we'd be thinking about. What are the foremost things that are in the market that you're looking at in charts, and they begin to build over time. Okay. Anyone that listens to the weekly commentaries can tell right away that that's a different animal altogether, because I'm giving you just the brass tacks about what it is that I'm looking for, applying the things that way. And I'm not bombarded by 860 people asking me questions in live session. Okay. That's distracting me. So in this element, you see how well I can operate and the things I'm using. And I'm doing it in a very limited capacity because I have to make these videos usable on all levels. Now, for charter members, they're not hearing anything better or more detailed than you that started in month one. There's no secret sauce being added on. I tried that, and it's just too much work. Okay, so what I did was I'm going to keep everything focused on a month one level. So anyone that comes in this mentorship, they can grow with the information, but also understand majority of it when I talk about it. There may be some things that pop up that you have to wait and research into later months. But for the most part, I'm giving you directional bias. I'm giving you the direction of what side I focus on more. Even though I may be bullish long term, I may change gears on a short term and say, okay, I'm expecting it to go down here. So I'm giving you a bias to work with and study. And I'm telling you which pairs that I don't want to touch when it's applicable. So even though this is not a signal service, okay, I'm not advertising it as one. I'm not implying that you should use it as such. I am pointing to certain things that you should already anticipate based on the concept. When I say certain things in video, even though I'm not spelling it out saying buy euro dollar at XYZ price with a stop at blah, 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 and take first profit at this, this, and this, your mind should immediately fill in those gaps based on the things that you've learned from the core content. And in the beginning month, you have the initial framework that really makes day by day daily bias possible. But what you do with that bias once you have it is what you learn at a graduated pace each month. There's more information. There's more pieces to the puzzle. So I'm really placing the ball in your lap and saying, okay, I'm going to tell you what's going to happen in the marketplace, but I'm not going to put it in such details because there's already a plethora of 20-year-olds all parading around the internet, okay, pretending now all of a sudden they're smart because everything I'm saying in these videos, they're parroting. That means they're saying everything I'm saying, and to whoever's listening, they look smart. And I want you to understand something. These commentaries aren't going to go on forever. Now, what are you going to do with your subscriber base now? Because I'm going to, in 2020, roll back into hindsight examples only. I'm not going to be forecasting anymore. So all the people that are getting themselves fat on these long-winded rants, and they get to cherry pick the things that it's going to talk about the marketplace, it's going to do this, it's going to do that. Everyone out there that's pretending to be a clone of me and not really wanting to learn how to do this, they're going to fail. And it's going to bring me great pleasure in helping that happen. The folks that are here to learn, they're not going to see any difference. They're not going to see any advantage or disadvantage over that because they're learning conceptually. If any of you have problems with that, the door is waiting for you. I'm not here to answer every person's wish. I'm not a genie. It ain't let's rub ICT's back and he's going to give me everything I want. That's not how this works. I know how to transform you into what you would be required to have as understanding and insight, to be an independent thinker, to make these decisions on your own. You do not need me to tell you forever, this is what's going to happen, this is what's going to happen, and that's not going to happen forever, okay? When I'm done doing all 12 of the individual trading plans with the charter members, I will no longer be doing weekly commentaries in the capacity where I'm talking about future moves. I'm only going to be talking about what has happened. Okay, so for some of you, that might be a deal breaker. And guess what? I'm okay with that. I'm absolutely 100% okay with that. And you should be okay with that too, because if you came in here with the expectation and this is how it's always going to be, then now you know it won't always be like that. So if you are here to learn, you will learn, but you will not have the sugar placed in your hand like a piece of candy 2 times a week from me. That's going to eventually change. Now, obviously, we have months before that actually happens because I got to go through each individual trading plan for each individual price action model. So that means there's 12 more months, okay, that I'm going to be doing this. But I'm also, as we go through, I'm going to be dialing back how much I give because I want to press upon you as the student to do the legwork. I want you to be able to do these things, not be codependent on me. Okay. So in 2021, the only thing I'm going to be doing is reviewing 100% everything that's happened in the past. And there is nothing going forward or projecting my expectations about what the market's going to do. That stops. I've already seen so many of these kids, okay, that suddenly overnight got smart. All of a sudden, they've never been around before. They've never been in the industry. You've never heard of them before. Now, all of a sudden, they're saying the things that I'm saying, and they look like geniuses. They're smart. Honestly, this might raise a lot of mixed opinions with the group here, and I know it may be very polarizing, but remember this. I'm not obligated to do these weekly commentaries and point to anything that's about to happen. That's just something I just felt I could do to assist. But you really don't need this. You don't need this. The folks that really want to learn how to do this don't require this. The folks that want to trade and try to push the envelope of what they should be doing with their time here will say, no, I need that. This is what you should be doing, Michael. No, I should not be doing that. The only thing I do is prod you along, point the way, focus on this path, stay on it, and you'll get here. The real reason why I've done these commentaries was just to prove that I can call these things before it happened, because on Forex Peace Army, there's a few people that honestly gave really, really slanted opinions about what they supposedly experienced here. And a few of them are the same person that lives in Canada, that's never been in the mentorship and has issues with me because he's just got problems. The folks that are going to be here for themselves, not because of what they're getting from me in terms of future moves, the ones that are really taking this information, studying it, and making it their own. Now, I'm not saying making it their own project and packaging it and putting it on a website and trying to sell it. Those types of individuals that get in here, they look at the concepts, they study on their own, they don't feel compelled to send me a laundry list of charts and say, hey, can you go over all these charts and tell me if I'm doing this right? That's not what this is. I can't answer those types of emails in a timely fashion, and it's just going to frustrate you. So this is a very hands-on, self-paced mentorship. There's a great deal of concepts and conceptual ideas that needs to be practiced on an individual basis. And because you do it routinely and you don't look at it has to give me a positive return every single time I sit down and do it, if you have the willingness and patience to keep doing it over and over and over again, you will recognize the experience factor that you're gaining, even though that the results that you get from practicing it don't give you the expectation that you had to come to fruition. It doesn't do that. You won't be discouraged. What you'll do is you'll identify, okay, that didn't happen. So let me go into this situation and see what was there that you may have missed. That's how I did this. Okay. All of you have had years shaved off just with the core concepts. The core content and concepts that I give you in the 12 months, that alone shaves everything off in terms of time. It reduces it greatly, and it doesn't make it where you watch the video one time and you know it, okay? Because there's a lot of people that think that's the case, and that's not what this is. There are times when you're only going to learn the lesson by being in that moment yourself, and then reflecting on what you're what you're encountering, how you're feeling, what concerns you're having, what fears. Are you getting really emotionally high on it? Like are you giddy? Are you walking around the house feeling like, well, let's call it what it is, arrogant, pompous, like you're smarter than you really are? You want to identify those moments and what you're feeling that about. It may be the fact that you have a win, or you called the low of the day and you got in real close to it and had very little drawdown. If you start having all those prima donna sensations and you're parading around the house, and I do this sometimes just to get with my wife and get on her nerves, but I do it to be facetious and be a troublemaker with my wife, because I already know that I'm going to get a rise out of her from it. But when you're doing it, okay, you're doing it as a character flaw in your development. It's going to be problematic for you if you live for that sugar high when you don't get them. Or and this is the point of this rant, if you go through a period like we did in November where it just doesn't feel like anything's lining up and the things aren't really perfectly aligned for intermarket relationships, and all the signatures that we normally like to see, or I like to see in price action, are just not presenting themselves, or some of them that are preliminary to setting up a solid entry, then they start collapsing or failing. When I start seeing those things that I look for, fizzle out or just collapse altogether before the multitude of things I look for a high probability setup for my own personal trading, I have to take a step back and not do anything. Now, I have performance anxiety when I go through periods like that, only because I know there's a hugely unrealistic expectation that students first coming in, first couple months, usually it's around the 5th month people start to get a little bit more mature in terms of being a student of mine, because then they can really grasp, hey, look, there's a lot of stuff here, and they didn't even get to the midpoint of the core content yet. But I know how it was for me as a new student, and I was really on my own. I would still fault other people for my own shortcomings, and I know that's what happens with a lot of you, and you may not admit it, but if you're honest with yourself, it's true. November was a very trying month, and the folks that continued on, here we are, in December, we're getting ready to have a cutoff in December 10th, and some of you won't continue because of what you experienced in November. Not looking at the greater picture of, that's one deviation from a long train of consistency. Okay, great. If that's the decision you've made, I am 100% behind that, because I can't fix that problem for you. It's internally, it's you. You're going to have a problem in your analysis as a trader on your own. You're going to get periods where you have losing. You're going to have periods of drawdown. You're going to have a series of losing trades. It's going to occur. How do you and how will you deal with that? Remember, you're going to be all by yourself or leaning on someone else that may or may not have as much experience. Don't have the understanding that I'm putting in your hands every single week. We went through a period of uncertainty. I was upfront and honest with you. I wasn't making any bones about it. I said, this is very tough for me, and I can't figure out one side of the market over the other. So I have to say something, because I can't be in a video and talk about, hey, look, there's something to do. We'll talk about it on next week. It doesn't work. Okay. You're here. You want to learn. So that's what I'm giving you. I'm giving you real world, real money experience, not demo trading experience. This is real money experience. And the lessons that you're learning is from losing fortunes. Lots of money. Probably a lot more money than you probably ever will have. And there's not a lot of people walking around that can tell you they have that type of experience. And the chemical imbalances that you experience when you lose fortunes, doing the stupid things that I'm trying to teach you not to do, when not to push your luck. The markets are going to tell you what's likely to occur. But if they start getting real quiet in terms of speaking to you through signatures and price that we look for, certain elements that we like to see, these overlapping confluences of intermarket relationships, they have to be there, or it's not a high probability situation. It's not a condition, if you will, that promotes a great deal of reward over risk. Risk is always going to be there. And some of you join this mentorship with the expectation that I somehow magically remove all risk. And it's not like that at all. There's always risk. There's risk until you collapse that trade. Period. End of story. It's over. You can't change that. You're here. You're participating in something. If you lose with live funds, that experience hurts. Not just financially, but it hurts psychologically. It hurts emotionally. It hurts egotistically, especially if you're a male. And because of periods of drawdown, periods of uncertainty, periods where performance is lacking, you have the benefit of not being in a situation that I'm in. I'm in a situation where I'm obligated on a 2 times a week basis to sit down with you, and I have to, with a gun to my head, tell you my opinion. And I try to be as honest as I possibly can to communicate. When it's easy, I will tell you this is easy. Or, as we experienced in November, it was very hard. It was very challenging. And if you go back and listen to all the previous months and years, I don't really say that a lot. Okay, there's a couple times I said I have to wait for more information. But really, November was just it was a dog of a month. And I did not feel confident at all during that month. I just didn't feel it. And if you're basing your decision on whether you're going to become a trader on the month of November or the results of what you did in November or how I did in November in my analysis. That's too myopic of a view on a lifetime. Okay, whatever your age is, just plays devil's advocate for a moment. Say you all live to be 100 years old. God bless us all and let us go on beyond that. But let's just say you plan to live to be 100, or you do live to be 100. Wherever your age is right now, are you going to use the month of November and its adversity to derail you or scare you or change your mind about what you want to get out of this industry? Or are you going to say, okay, I experienced something that I maybe admittedly wasn't prepared for or didn't think would occur, but now that I did it, and now we're coming out of it and we're seeing the things start to come back in, and we can see there's setups that are there, things are forecastable, okay, if that's even a word. You can predict things again and see them pan out. That is something that when I was learning in the 90s, I would have periods of win, and then I'd go through a period of drawdown where I have a losing trade, and then I would get mad. Instead of taking a step back and say, okay, did the state of the market change? Am I still in that environment where the buy is good? Because that's all I was doing in the 90s. I was only buying long. Couldn't sell short because I was afraid of it, didn't understand it. But if I took a loss, I would get mad and go right back in and add more. This time I wouldn't put a stop loss in because they're going to get me if I did. And I'd lose more. And it would wreck me emotionally and psychologically because I was forcing myself and my will on the market. And the market is too big and formidable to have somebody like me coming at it with a stochastics and a 50-day moving average on a 60-minute chart. It was no contest whatsoever. It chewed me up and spit me out. I did not know what I am teaching you on a week-by-week basis, telling you the things that make it difficult and the things that would change it from a state of problematic and low probability. What factors are the things that I look for to reinstitute a level of high probability or a reasonable level of risk that could be taken for a potential yield or result that would be favorable? That's the mentorship. It's not those lessons that I give. It's not the videos that I did that you pay for each month. It's your participation and listening to me talk. Now, eventually, in 2021, I'm not going to be doing forecasting anymore. I'm not going to be doing it. I'm not going to be telling you what's going to happen in the marketplace. The level of teaching will still be exponentially higher than me pointing to future moves, because I'm going to be able to break down and spend my time on moves that already happened. And also, I'll have a large base that have been with me for a number of years now that will be charter members, and they don't have to have that little cookie of, okay, prove you can do it, ICT. I need to know he can do it, or I just don't want to spend any time. This is so too long and too boring. I need to know it works, because if it works, then I ain't got to worry about it. Then I ain't going to have those feelings. See, at that point, I don't have to worry about giving you the attaboy or attagirl and pat you on the back and say, it's going to be good. Trust me, it's going to be better. I'll be able to prove myself eventually over time. I have a long history already on record. Look at the commentaries. This has all been to prove forecasting is possible. Knowing what the market's going to do is possible. Can I do it? I'm on video. You can see it and hear it and listen to it. It's all time and date stamped. I can't change all that. And when you watch the video, it's in an unedited format. Some of you want me to go back into videos and doctor them and fix them. It's because I've said something wrong or I said things improperly. When you signed that agreement to join here, you signed understanding that the very videos that I made in 2016 to 2017, you're buying access to those lessons. And anything new that comes out, you're a participant of that. I contractually cannot go back in and edit those videos. I can't. So the only thing I can do is leave it as they are, and when questions come up because I've said something incorrectly, and what I mean by that is there was one lesson I talked about. Expansion can't happen after, I don't even remember exactly what I said, but I said something wrong. And it's not a make it or break it type thing. It's something that's easily corrected if you go through all the other content that's after that. But nonetheless, I said something wrong because I don't have a script. I don't have something in front of me. I don't read it because you can hear me. I'm speaking like I always do, off the cuff and from real experience and or insight that I have gleaned over these years. I don't change anything. I don't edit anything, okay? And I have given not just 1 year like they used to ask on Twitter. Give me 1 year where you can call the market, blah, blah, blah. I've done that. I've done it, okay? We got 2.5 years of it now, okay? And when I'm done over the next 12 months, I'm done. I'm not calling moves in this mentorship anymore. I'm not doing that because it's being abused, and I'm not making other people look smart. You can do that on your own by learning how to do this. But the folks that are joining just to go on to create their little IML, okay, racket that I'm in the midst of getting lawyers up on, and I am absolutely going to be suing them. All of that stuff, okay, it's just going to lead to me taking their money in another manner. And that's exactly what's going to happen. I'm not in the business, and I've said this before, even when I was making the core content, I said, I'm not your sugar daddy. I'm not going to give you signals so that way you can turn around and sell them like you've created it yourself. Now, when I say that, I'm talking to the individual or individuals that are in at the time and maybe are now that, okay, well, I know what I'm going to do. I'm going to take everything ICT says because there's other people in Colombia that don't know who ICT is. There's other people in Venezuela, okay, or other people in China that have never heard about ICT, and these people can take what I'm saying and regurgitate what I'm saying in these videos, and when the markets take place and they pan out, they're going to think that that person has it all figured out. But what are they going to do when I stop and they don't know what they're doing? It all stops then. See, I don't need this mentorship. Okay, I was rich before it, and I'll be rich after it. I can do all these things in here. Okay, when I sat down and developed these lessons, I did this so that way my children, okay, my children, not my friends on the internet, okay, not people I know in casual circles, my flesh and blood would have the ability to know what it is that I know. If something happened to me, they have it. Okay, there are details in these videos that change people's lives on all fronts, not just financially, but on how to pattern yourself and how to live an effective life and try not to worry about the things that you don't need to worry about and focusing on the real things that should be focused on. The initial inspiration was to inspire other people to make a lot of money and then help other people. And I kind of want to remind people that are joining here, that's still my desire. I don't want you to be on Instagram flashing cars, okay, and stupid Gucci bags, and it's nonsense. That's dumb. I want you to do very well and be in a position where you can help other people. And if they need something, to just do it. Not for them to say thank you, not for to have your name put across the front of a wing of a hospital, but because it's the right thing to do. And you have no idea the feeling that you get when you can do that for people. You go in, buy people's groceries. Some people's, losing their house. Help them with that. Okay, somebody's lost their job. They can't support their family on the short term. Help them out, and not become a sugar daddy. Not be somebody that somebody can look at and say, well, he has a lot or she has a lot. So let me just ask him, and if he doesn't do it or she doesn't do it, you're an a-hole and you're self-absorbed. I have people I've never met that are asking me to pay for their college tuition. Now, I don't know about you, but that's offensive. And I may be affluent. I may have a lot of money. But how is it my obligation to pay someone else's tuition for college? Because here's the thing. I had to pay my own way in everything. I had to pay for all this stuff. And I appreciate it more because I had to work hard for it. None of this stuff was quote unquote given to me. My education was hard earned. And just because someone has money, and when you have money and you've earned money and you've made yourself out to be the future vision of yourself, learning all these things, don't let other people take advantage of you. You don't owe anybody an explanation of how you spend your money, what you do. You don't have to give a receipt on how you help other people. You don't have to do any of those things. You're not obligated to any of that. Don't let anybody ever guilt you into that. It's just amazing how all these folks, number one, they'll sugar talk and they'll say all the greatest things about you. And then the real question comes up. Can you give me? Can you fund me? Can you seed me? All these people, they don't, first of all, I wouldn't even seed anyone that hasn't been traded by me. In other words, what am I saying by that? I would not give any capital, no money, zero, zilch, not one penny, not one dime would go to anyone for trading that I have not personally trained myself. Now, I already know what's going on. Light bulbs are popping off. Oh my goodness, he's saying that he's going to give people in this mentorship that can prove they can trade money. No, that's not what I said. I'm saying that there are people, because I've become more noticeable and approachable because of social media. Other people have asked me in recent months, hey, give me money. And I'm not talking about little. I mean, these people are asking for real money. I'm not doing that. And I don't need to tell people what I do with my own money because they want to know. No, it's nobody's business what I do, who I help. But I can tell you, it's not these people asking for their tuition in college, because I don't do that. You're going to have these problems, okay? Real money, more money is not going to make problems go away. You're going to have different types of problems, okay? You're going to have people asking you how much you are earning, what you're doing with it. Are you paying taxes? Let me tell you something. Uncle Sam would never, ever, ever let me get away with not paying taxes, okay? I have to pay a lot of taxes, and I don't like it, okay? But the long and short of it is, you're going to have a whirlwind of all these things that's going to come up. And they may not be a factor for you right now, okay? Things like people asking you for money, okay? Or how you spend your money. Or you may not even been affected adversely by November's environment in the markets. And that's great. That is exactly where you should be. But if you are 100% made up your mind that trading is not for you because of the adversities that we've experienced in November, I would be doing you a disservice if I said, keep going. Because if you are absolutely 100% turned off to the measure of risk that was associated with this industry that you didn't fully understand until what we experienced in November, then you absolutely are probably making the best decision regarding this decision of being a trader or not. If you can do it that early in the game and know that it ain't for you, guess what? You're winning. You're doing it the right way. You're avoiding something that will eventually cost you thousands and thousands of dollars and decades of chasing something that you're never going to want to learn because you aren't going to be disciplined. And there's no shame in that. When I say that, I'm not saying you're a loser. I'm not saying you're stupid. I'm not talking down to you. I'm not saying you're not good enough. I'm just saying you know your limitations. And if you can't muster up the confidence and discipline that's required to press through adversity, then you need to stop. And there's no shame in that. Absolutely no shame whatsoever. None. Down the road, things change. Maybe you mature. Maybe something else happens. Whatever. and you have a change of heart, the markets are going to be there. You can always learn how to trade, but you cannot always be prepared mentally and psychologically for the adversities that you're going to meet in this industry. And it's going to press upon you, and it's going to just contort your expectations and cause fear and greed to rise up in you like you've never experienced in your life. And you're going to learn just how ugly you are inside. And some of you aren't prepared to learn that about yourselves, but it teaches you that very thing. The things that are most darkest, that you keep quiet and you don't like to show anybody, you're going to learn all about that in the industry, because the money, the love of that money, and the hate for being wrong, this is a perfect environment. This industry is a perfect laboratory for creating egomaniacs that are self-absorbed and just all about themselves and pompous, arrogant fools. And I have been that. Now, it doesn't win you a lot of friends. It doesn't make you feel good. It feels good for a moment when you can belittle other people that may have talked down to you, but then guilt comes on later on. So how's that really effective? It wasn't for me. I would have rather, looking back at it now, just lived quiet, drew no attention to myself, talked no figures, not what I did. It would have been better for me not to do those things. And that's probably a recipe for some of you to start on to right now. Don't make a point to talk to your friends and family about what you're doing here, if this is really what you want to do. And for some of you, you've already made your decision. It isn't, and that's okay. And I'm not responding to any emails. I'm just saying, from just a gut feel, I know some of you met adversity for the first time last month, and maybe you're in month 3 or 2 or 1, and you're thinking, man, this is not what I thought it was. If that's how you feel, there's no shame in quitting. Trust me, I won't think any less of you. And honestly, it's probably the best thing for you if you're not prepared. I'm not going to try to talk you into, like a motivational coach, keep going, because if you're not in it, you're not in it. And you're going to lose money. You're going to waste time and waste money. I don't need your money, and I certainly don't want to waste your time. I'm going to be making these videos whether you're here or not. But if you're here, you got to be really here. And that means take the good with the bad and weigh it all out. And you'll see the good far outweighs the bad. I mean, we've had very little periods of not seeing things pan out. In other words, we've been on it, and it was good. It was really, really good. I mean, I've honestly contemplated stopping the analysis, the commentaries, like December, like that be it. And say, hey, look, I'm not doing it anymore, because we finally hit a wall where the markets were very adversarial to every discipline. Every discipline out there was affected. I mean, I have friends in the industry, and they all said the same thing, man, I got my ass kicked. Okay, I don't know what's going on, and they're asking me, hey, what's going on? It's, what's going on with gold? What's going on with oil? What's going on with the equities? What's going on with the NASDAQ? Yeah, I get flooded by that stuff all the time, and I was giving them the same response that you got and paid for. I don't know, and this is very hard right now because it got real quiet. The volatility dropped down. The very clear one-sidedness that I look for was muddled. And when it's like that, I got to take a step back. And just as a closing point in all this rant, folks that aren't here and see and hear me talk about the things that I'm looking for and the things that I don't want to see, and they pan out that way or don't pan out that way, those lessons, those things, those talking points, okay? If I were in the same room with you, okay, if we had a classroom setting, you would be able to read my body language. You would be able to see how sincere I'm trying to be when I tell you these things on how to avoid losing. You can learn how to make money and how to trade using the core content. The core content is not going to teach you what these commentaries are giving you, because I'm letting you in my head and how I internalize things, the things that I'm fearful of, and I'm honest with saying out loud. I'm telling you exactly what I would be saying in my journal. That's what you're getting. You're getting the vocal format, okay, the audio version, if you will, the audio book of the ICT journal entry, less all the other personal things that go along with my personal life, which is not available to anybody and it's not anybody's business. But the views that I have and the things and the concerns that I have are being articulated in these commentaries. So they're like they're chronicles, if you will, of me and how I think and my concerns, the things that are most important at the time when I'm looking at the chart. I draw your attention to those things. And I also am teaching volumes about the things that I'm not talking about. And that's how you want to use these commentaries. Listen to the things I'm pointing to, draw your attention to and shoot where I point in your demo account or paper trade them. But also when time is permissive, you want to go back and listen to the videos again and see the things that you obviously can see in the core content experience that you're learning. Why am I not talking about the things that you see in the chart? Because there may be a fair value gap, or there may be an order block, or there may be a liquidity pool, or some kind of pattern or an idea that you just recently been exposed to, and it feels like I'm glossing over or I'm forgetting it or not seeing it. I'm teaching that is secondary or not as significant as a factor as the thing I'm talking about in the commentary. And it teaches you by experience and consistently looking at it and listening to me how I go over price action. There's an hierarchy to these PD arrays. Okay, I got an email. Is there a structure or is there a level of importance, one thing over the other? I cannot condense this answer to okay, this is what it is, and it does this. The only way I can answer that question is these commentaries, because it's all based on what the market is showing at the time, which is, again, the reason I always argue the point that people say, oh, you could have taught this stuff in 3 or 4 videos. No, I couldn't have, and I still can't, because there's so many factors that experience guides me that you have to be a part of. And again, that's the mentorship. It's not PDF files, okay? It's not videos that already been made in 2016, 2017. That's just the foundation that allows you to understand the wavelength I'm speaking on. I just can't pour everything into one video or a few videos and it all, because there's so many things that lead to high probability conditions. Probable, but I wouldn't trade in it, where that's where people get stuck. They see setups coming, and I may not talk about it. I may not want to do anything with it. I may not even comment on it. And it may be a pair that we talk about, like Euro or British Pound. And you see something in your chart, and because I haven't commented on it, you disregard it or you second guess it so much that you don't paper trade it or study it. That's the worst thing you can do. That's the worst thing you can do, because if you feel the impulses to see something pan out, and just because I haven't said anything about it, remember, there's all different time frames, there's all different styles of trading, and my personal choice on trading any given day may be linked to another time frame or a setup that is not germane to what you're looking at. That's the reason why everyone in this mentorship can be profitable, and we could all be trading the same pair at different times in different directions. It sounds like a paradox, like this. That can't be possible, because how can we all be doing the opposite thing all different times in the same market and same pair and still be profitable? Yes, because the market's fractal. Price is fractal. So my time horizon in a trade and my objective in trading it may not align with what you are gravitating towards. Some of you really want to be a swing trader and you don't want to be doing these short-term types of moves. Even though that you're going to learn how to do it better in the way I'm teaching and calling price moves, you will learn how to do it because all you're doing is taking what I'm applying on the smaller short-term time frames and applying it to that daily and weekly chart. And everything is the same. It just requires a lot more patience that I don't personally have. So I think I've said enough and answered enough emails. I just really had a lot of things that I felt were necessary to say, and I probably bored some of you and probably frustrated some of you also. But I just wanted to remind folks that if you choose not to continue because of the hardships of November, I understand. I don't blame you. I don't think you're any less of a person. I don't think you're stupid. I don't think you're less of a person if you don't stay with this, because I get it. I understand. But just know that this is what was going to happen regardless, whether you were in this mentorship or someone else's mentorship or trying to trade on your own. November was hard for everyone. It was not easy. It was difficult. So for those individuals that are still ponying it up and continuing on, it's just another day at the office. You're going to have more of those in the future. It's going to happen. How you handle yourself, how you conduct yourself, how you view it. Was it a disabling event? Did it completely, dismantle your business model, or was it just a detour? Because that's all it was for me. We're back in the swing of things, okay? And bottom line is, you're going to have that again. If you're going to be trading for, let's say you're 40 years old. I don't know how many of you in here are 40, but you're 40 years old and say, by the grace of God, you live to be 100. That means you got 60 years or so of potential trading years. And you're going to look at November. That's the defining moment for you. That's going to make it or break it for you? No. Because I'm going to tell you something. Looking back my first 6 years, I had a lot of Novembers. Okay? I had a lot of November events. And any one of those things could have easily taken me completely out of this game. Like I said, I quit dozens of times. But they were just breaks. But here in a mentorship, there's really no breaks. You can't take your mentorship and say, I want to go on a break and I'm going to come back in a couple months and resume where I was. That's why I said, you have to be really committed. Otherwise, I'm going to force you to start all the way at month one. And people have done that. It's not fun. I don't like telling them to do that. It does seem like a money grab, but it's also a disciplinary thing to keep you motivated. It also sets the standard very high. When you come in, you're expected to stay on course for 12 months. Then at that point, you can do it at whatever pace you want. You can come in and go into the mentorship as you want, but you have to be 100% rigid with those 12 months and then that conversion at the charter level. And it is what it is. But anyway, I went on and I addressed a lot of things that I got by way of emails the last couple weeks. And yes, I still have a queue of emails that are a couple weeks back. So I know I see some of the folks asking, hey, are you ever going to answer this email? I'll answer it when I get to your original one. Okay, I'm not going to answer your freshly prompted one. Okay, you can't jump to the head of the line. Sorry. So anyway, the euro dollar, finally, we got back to euro. The run below these equal lows, we were anticipating, and I outlined, I wanted to see it trade below that, reject, and go higher. Running the equal highs here and then going up and closing in this fair value gap. And should we trade above the fair value gap, it should accelerate to the buy side liquidity pool over here. Today, we didn't get all the way up into the fair value gap. We got really close to it, better than 80% of it, but then had a intraday reversal here. I don't see this as a all-out reversal yet. I think this is just, profit taking, a rebalance to the consequent encroachment in here. This may be just a period of consolidation again. It may need to come back down a little bit and reload and then send it higher. That's okay. I could accept that, and it's certainly, in terms of the way I internalize price action, it's permissible. I could see it happening, and it wouldn't really undercut my bullishness on euro. I am not willing to see it go below consequent encroachment. If we close on a basis on the daily chart below consequent encroachment, that is problematic. Then we're probably going to go lower here. And then that would, to me, still chop wood, because I still think this is the low of the year in October. I'm 100% certain that I don't see us going below October's low. Now, it can trade down below these equal lows, and then I would change my mind about that. Okay, so that would negate this whole premise of October creating the low for 2019 for euro dollar. I gave you parameters right now what changes my bullishness on the swing side and the short-term side. What am I looking for going forward? I don't want to see anything below consequent encroachment. I would like to see it trade just below Tuesday's low. If it's going to trade lower, trade just below Tuesday's low and use that area in here, not go to consequent encroachment. Go into this BISI and then reload and have it move higher, because that would look like this is a big long wicked doji, and candlestick traders are going to say, okay, this is bearish. We rejected here. It's going to go lower, and these are equal highs, so therefore retail resistance is going to be bolstered, and their confidence will be increased because of this single wick, where I think this is just one little short term. I mean, this is a nice little pop. This movement here in euro dollar, this is significant, and only because of the low volatility we've had in euro dollar. But this is, a lot of people have the same view that I've been forcing on you, is if you can get it and run. Take your profits as soon as it's made available to you, because this pair has been really, really quiet. And if it's going to offer you 100 pips, get it and go. Don't wait. If it's offering you 80 pips, take it and run. Don't expect it to pay all the way out up to here. Okay, you have to pay yourself along the way, which is one of the reasons why I force my students in the early stages of their development to take partials. Experience will dictate over time how often you'll take partials, what ratio you're going to take, how much of the trade you're going to take off. I get all those questions all the time. How much this, how much that, whatever you feel comfortable with. Okay, initially, whatever appeases that insatiable desire to feel right. Okay, in the beginning, take as much as it's required, because that feel good moment where you get endorphins released in your body and it feels good, that will create a mental anchor to trusting this process. Just like fear and anxiety is taught to you when you take a loss because you didn't put a stop loss in, it makes you fearful of taking all the future trades because of that environment, because it's not an endorphin that you've released in your body. It's all of the stress inducing cortisol, serotonin, all those types of things that release in your body because of panic and anxiety, that you will start feeling body symptoms from. Tingling in your hands, your face will start to tingle. When I used to have really bad panic attacks in the marketplace, my lips would go numb and tingle, and the left side of my face, I swore I was having a stroke. Left side of my face would start tingling, and then my arms would start tingling. And really what was happening was I was releasing adrenaline. And because I was sitting still and I had this adrenaline rush, it was like a sports car. Imagine going out and starting your Ferrari Spider and sitting there with the gas pedal floored, but sitting in neutral. That's not good for the engine. Okay, it's designed to go and not sit still at a high revving RPM. Your body is going to give you the same thing. If you're pumping adrenaline, that's a fight or flight chemical that the creator gave us, whether you want to choose to believe it or not. I'm not trying to teach Sunday school here, but it's there for your benefit, either to run away from a danger or to fight it. And if you sit still in front of the charts, what will happen is your body will create these symptoms, okay? And you'll start feeling things, and cortisol and serotonin will release, and all of a sudden you're going to start feeling really anxious because you're going to feel like you can't breathe. But really what you have done to yourself is you hyperventilated and you brought in more oxygen and blew out all your CO2. And when you do that, and I've done this a few times, and it was very scary, I panicked so much that my fingers were drawing up into a fist, and then my wrist was bending towards my elbow, and then my elbow was pulling closer to my shoulder, not anatomically, but what I'm saying, like my whole arm was curling up, like the Wicked Witch of the West shrunk up when she died. When you're probably saying, man, what kind of commentary is this? Look, it's like this. You're going to feel all of these things if you don't listen, but I'm reminding you, if you have this occurring, and I've had people in the past, when I talked about it before, admitting that I've had anxiety and panic attacks when I was a younger man. When you feel these sensations and you blow all your CO2 off, okay, your body will start to knot, the muscles will knot up, and my knees, it was a weird feeling. My legs started bending up into a fetal position, like a knot, like my whole body was drawing up into a knot, and it felt like I could not breathe. But I was fine. Like I could have stopped breathing for a minute, and it probably would have done better for me had I not been gulping air in and blowing out all this air, because I was gasping, thinking, I can't breathe. And I was breathing way too much and too fast, and I blew out all my CO2. So if your oxygen to CO2 levels are screwed up, you're going to start feeling these body symptoms, which makes you start thinking you're having a heart attack or a stroke, or you're going to throw up, or you're going to pass out. All of these things will whirlwind in your mind, and you're not going to be able to think about the market. And then you're going to start thinking, if I trade, I'm going to feel like that. And I did that. And I got afraid of looking at charts. I would go to my computers, turn on the screens, and then before I got the final screen up, I'd have an anxiety attack, because I was afraid I was going to feel all that stuff again. And it's a vicious cycle, but as soon as you start feeling that anxiety, you want to be able to take a step back, slow your breathing. If you have a sweep second hand on your watch, and most people don't have this anymore, but I have watches that have it. Like I don't have a digital watch. I won't ever own a digital watch, like the Apple Watch stuff. You can have a face appear on your Apple Watch if you have one of those, or a Samsung watch. Put it on so you have a sweep second hand. It's good to see something visually, and you want to watch it for 60 seconds, go around, and focus on your breathing. Breathe in through your nose and out through your mouth. And what will happen is it'll regulate your breathing, it'll regulate your blood oxygen level and your CO2 level. And all of the body symptoms will dissipate because your mind is watching the second hand tick around the clock, and you're also doing it, distracting yourself for a full 60 seconds, which is about the same amount of time it takes for your CO2 level to regulate with proper breathing. So I threw that in there for extra credit, no extra charge. You're welcome. But that's how you defeat a panic attack. You don't need to go to a psychologist. You don't need to go see a shrink, okay, or a therapist. I just gave you something that cost me thousands and thousands of dollars to get out of one simple little book by Lucinda Bassett, Attacking Anxiety. So if you ever had any anxiety issues, that's a great book to read. She also put out a course too, if you have anxiety. I thought was okay, but really the first CD where it teaches you that concept that has told you how to combat a anxiety attack. Once you do that a few times, you realize you got control, and it all starts from your breath. Okay, how you breathe. If you panic and you blow all your CO2 off, then hey, look, you're in trouble. You're going to feel uncomfortable for about a minute, and if you're fearful you're going to throw up or pass out, what's going to happen? You're going to either throw up or pass out. You're not going to die. Okay, but now here's what will happen. If you do this to yourself for years and years and years, you end up causing damage to your vascular system, your heart, and because you can't keep releasing adrenaline, cortisol, and serotonin over and over and over again and not having an effect on your body. And eventually you will have these issues where you will have problems that lead to heart attacks and stroke. But when you're initially feeling it, you're swearing that you're ready to go to the morgue, like you're going to drop dead. And it's just, you blew all your CO2 off, and your racing thoughts and what if negative thinking feeds itself. So when you're watching the market, when you're journaling, you also want to include those things. And here's the main thing. As soon as you start thinking about something negatively and you experience it while you're watching price action, you really want to include that in your journal. You may not be able to do it at the time because you may be at work or something else is preventing you to write it in your actual journal, but you want to make a notation of what it is that you thought of most recently that scared you or has your concern, because that's a trigger. And then you got to go and deal with that. It may be dealing with it with your spouse or your child or your work or job, some form of stress, but you need to go after that and deal with it. And then it won't be a problem for you to be anxious and worry about it anymore. All of your thoughts, okay, either going to be a problem for you in trading, okay, or a distraction. All of your real world things, okay, are never going to be advantageous to your trading, because you have to be focused on open, high, low, and close and how you're internalizing that. If you're distracted by any positive or negative thing in your personal life, it's going to be detrimental to your performance in trading. And you won't hear that talked about anywhere else. And that's just the truth, because anything good will be magnified to good. And it's going to be something that you look forward to and you're anxious about, because not in a bad way, but you're excited, I should have said. When you're looking forward to something like maybe an anniversary, you're going to go out on a date with your girlfriend or your spouse, and you're going to commemorate something. If you're really, really, really focused on that, don't trade, because you're going to, number one, be distracted. And if you have a bad transaction in trading, that's going to roll right into your bad thinking and feeling into your good event in your life, and you'll poison that moment. Anything bad should go without saying. If it's really something that you got to deal with negative that's going on in your personal life, don't try to trade in those environments. Go out and deal with it. Tackle it. If you got fired, from your job, don't trade. Take a couple weeks off and give yourself time to secure your next employment. Don't look at trading to reward, or not reward you, but to replace a feeling that you're not getting in your personal life. That's always a recipe for danger and blowing your account out, because what will happen is you're going through this tailspin and you'll make all these poor decisions, and they'll lead to a great drawdown in financial terms, yes, but it'll also erode your mental capital and just completely disable your ability to focus. You'll think toxically about everything. You won't see the good in any of it, and you won't have the confidence you need to do this industry. You can't work in this industry if you don't have confidence. Arrogance is killer, but confidence is key. You need that. So I want you to focus on not seeing any movement below consequent encroachment on a closing basis. And that means the daily chart can go down to consequent encroachment. It might even sweep it, but it can't close below that. If it does that, then we're probably in trouble, and the equal lows need to be swept in a more meaningful manner. All right, so let's drop down into an hourly chart. I know you're probably saying, man, you're all over the place today, Michael. It is what it is, folks. All right, so this is the low we talked about, trading the Asian range standard deviations down, creating the very, very low. And displacement, we had a break in market structure, fair value gap, came down, closed fair value gap, expansion on the upside, consolidation, and then we were looking for it to move up into our fair value gap. The market did, in fact, rally up. Consequent encroachment didn't quite get all the way up in here. I really, really, really want to see a rejection, much like we saw it down here, once we get below these equal lows, if we do at all. I want to see it aggressively run back above. Now, you're looking at this equal highs and a run in here, and you're thinking, okay, it's probably not going to do that. From a structure standpoint, okay, yeah, if you're only arguing it from a 1 hour chart, yeah, but I'm not looking at a weekly move on a weekly chart on an hourly chart. I'm not breaking the whole model just because we had this movement up in here. And this is reasonable. Going up in here and then coming back down, as long as it holds the structure I outlined on the daily chart, I'm not concerned. Okay. And I think that's going to be it. So let's go over to cable. All right, so here's British pound versus the US dollar. This is our daily chart. Really nice seeing movement like this. We are looking for a run above these equal highs over here. This is a Christmas time horizon still. It looks like it could probably get there earlier than that, but we could also be creating an important high here and then go back into consolidation. So just be mindful. That's why we tell you as developing students to take profits, take partials, and be content with that. Don't be requiring the entire move because I outline it. Okay, you're going to teach yourself to be independent by paying yourself as the moves transpire. I don't want to see Monday's low given up. We do have a fair value gap in here. I don't even want to see it trade down into this at all. I want to see it consolidate maybe and then expand again, or straight continue right on it higher, either one. I don't want to see it to trade down into the fair value gap, and I certainly change my bullishness if we lose Monday's low. Moving on into the hourly chart. Hourly, very handsome price action, really nice movement on the upside. Again, I don't want to see any of the fair value gaps need to be traded into. I want to see it hold this consolidation and this accelerate on the upside. That's what I anticipate. That's what I'm looking for. I don't want to see any kind of deep retracements on pound. Last bit of business, dollar CAD. Here's dollar CAD, and we had previous weeks. I want you to study this on the daily chart on your own. I'm only going to go right into the hourly chart. Previous weekly high, and this is the buy side liquidity resting above these relative equal highs. Tuesday created a high of the week thus far, could change, but right now it certainly looks like it's going to be this way. We had relative equal highs here, ran above previous week's high, buy side liquidity swept, broke down, market structure break in here, fair value gap trades up into that ahead of the rate announcement, and then extreme decline. This low here, I want you to look at the daily chart. You'll see that that is a old daily low, and sell side liquidity rests below that. The only thing I want to talk about for this chart here is the importance of what I taught recently with fair value gap. Fair value gap highs and lows are remembered by IPTA, okay? And you can see that happening here. Fair value gap here, project it through. Now, one of the questions I am kind of like anticipating for everyone, okay, I can have a lot of fair value gaps, just like a support and resistance line could be all over my charts. Which ones do I keep? Which ones do I throw away? You're going to learn about IPTA data ranges, okay? And when you get to that lesson, I want you to think about what I taught relative to the fair value gap. When do they expire? Okay, I'm not going to spell it out here, but the answers are with your IPTA data ranges. Okay, so your look back is your answer. Okay, so I'll leave it at that. I'll talk more about it, okay, but not in this weekly commentary capacity. It'll be in price action models for charter members. But fair value gap, look how beautifully, perfect. Hits it, bang, goes lower. Now, again, supply and demand says you can't cut through candles. Sorry, Sam, you're not speaking what's required in terms of truth. Okay, you got to be able to look through and see the context. And this context is imbalance, rebalance, rebalance. Look how much time it's spent in the fair value gap here. Expansion, lower, back into it. Fair value, move away from fair value, back to fair value, move away from fair value. Okay, the lessons that you're going to get by using fair value gaps, and also how far you can use them in terms of time, will be paramount in your really high-end analysis concept and technique when you finally settle in on what it is that you're going to be doing as a trader. Those will be so far enhanced beyond your imagination that I can't articulate how I feel with it. I can't say how good it is, because number one, it's going to sound like I'm just sugarcoating it all. But when you can see it and you conceptualize it and you know how to expire fair value gaps, and where you no longer consider them with the IPTA data ranges, okay, those times are your expirations. And like I said, I'll teach more on it when we get into price action models that require it, and then the trading plans as well. But that's the business for dollar CAD. I got one more. This is for Aussie dollar, and then we are done. Aussie dollar. So Aussie dollar, we got to go back out to a daily, and we had price run up in relative equal highs. Oh, Michael, that's not really obvious. When you go down to a 4 hour and an hourly chart, is real obvious. Bearish order block prior to the down move, equal highs, price expands up into that. This run in here, if we look at the hourly and zoom out, Okay, equal lows, ran down, got everybody thinking it's going to go lower, breaking market structure here, expansion. Every down close candle should offer bullish support, and every premium array should be broken. This is scrunch this up. Right in here, we have a fair value gap in here. That's the next level of importance, I think. If we go into, let's see here, horizontal line right there. I think 68.70, 68.80 in that area. Next upside, if it gets through that with any energy, buy sell liquidity pool resting above these relative equal highs right in here. I think we've retraced it enough here, and I don't think it needs to come down into this fair value gap. I want to see it like kind of like what cable I mentioned with that one, consolidate where we are tightly and then expand higher. That's what I'd rather see. I don't want to see any kind of give back. There's no necessity for it, and we've done a nice run on sell side liquidity down here and rejected handsomely. We broke above an old high. Anything in here consolidation on the upside is good. Anything running back below once we run above these highs, that's not welcomed. That's why I said I don't want to see any kind of deep retracements, because all we've done then is simply taken out buy stops, and then it can resume lower. Where we already taken out sell stops here, we want to side on the higher time frame. It's moving higher, and the buy side liquidity resting over here. As I mentioned, that would be the next draw on liquidity. I gave you a homework assignment for 30 pips out of dollar CAD or Aussie dollar. I was not able to trade the dollar CAD pair. I was out with my wife shopping because Christmas is upon us. I shared with you guys with a live account. It's that forex.com account, and it's a real account, and I'm only giving you real examples with very, very small leverage. Try not to entice people to think that they can make millions of dollars in a couple months just because they watch a couple of my videos. So hopefully you've gotten something out of this long-winded video. There's a lot of stuff included in it. Watch it a couple times if you need it, but there's a lot of things I felt inclined to answer in terms of emails and questions, and also kind of like predicting where your thought processes are in the current market environment. So until I talk to you this weekend on the Saturday review at 5 p.m., wish you good luck, good trading. Enjoy the rest of your week.